Okay, so we are going to do problem BE 4-8. BE 4-8. Okay. BE 4-8 is on page 192. And BE 4-8 says, the bookkeeper for Tran Company asks you to prepare the following accrual adjusting entries at December 31. Use the account title Service Revenue, Accounts Receivable, Interest Expense, Interest Payable, Salaries and Wages Expense, and Salaries and Wages Payable. So there's an A, B, and a C. So you don't have to figure out the interest on this one. They did it for us. So A says, interest on notes payable of $300 is accrued. So what that means is we have $300 of interest that we owe to somebody for money that we borrowed or something that we're going to charge interest on. It's not in our books yet. So for the interest one, for the accrued interest on December 31, we're going to debit interest expense for $300. And we're going to credit interest payable, $300. Okay. All right. Any questions about that one? So we're debiting interest expense, $300. We're crediting interest payable, $300. Okay, the next one, B, says, services performed but unbilled totals $1,700. So if we provide services that are unbilled, we need to create a receivable and recognize the revenue. So we're going to debit accounts receivable. What did we get? We got a receivable, right? What else did we get? We got a revenue. Service revenue. Questions about that one? Any questions on that one? Okay. C says, salaries of $780 earned by employees have not been recorded. So we have to pay our employees. So we have to create the liability, which would be salaries and wages payable, right? And liabilities have a credit balance, so that means we have to credit it to make it go up. So what are we going to debit in that case?
Expense.
Expense. Salaries and wages expense. So we're going to debit salary and wage expense, $780. And we're going to credit salaries and wages payable, because we're going to pay our employees later. Okay. Questions on any of those? Okay, so now we're going to go to CE 4.3, which is previous page 191. Okay, and we're only going to do part 1 on this, and this is just naming what kind of an entry you're doing. Okay, that's all we're going to do is part 1 on this. So it says, Cortina Company accumulates the following adjustment data at December 31. Indicate 1, the type of adjustment, prepaid expense, accrued revenue, and so on. So we're just going to name what they are. So the first one, supplies of $400 are on hand, and supplies account shows $1,600 balance. So what does that fall under? What is supplies actually? They're a prepaid expense. Supplies are a prepaid expense. We just don't call it prepaid expense, even though we call everything else prepaid expense. We call it supplies. Okay. B, Services performed but unbilled totaled $700. Yes, it's a revenue, so it's an accrued revenue, okay? C, interest of $300 was accumulated on a note. Expense, so it's an accrued expense. And then D, rent collected in advance totaling $1,100 has been earned. So that's an unearned revenue. So we're recognizing an unearned revenue.